The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everybody. This is the Wednesday edition of the Tiger Technician's Hour. Monday, Wednesday, Friday, 11 o'clock till noon. Of course, I follow 2 fabulous hours, and you're going to get another 6 hours all the way through 6 o'clock today. Ending up with Tom O'Brien, 4 o'clock till 6. And, of course, straight after me, you've got Larry Pesavento. And I believe today we should also have Ken Shreve, Dave White. So what a full day we have. Fabulous technicians. And let's go straight to the market. What we're looking at here, let me just make this a gray A. There we go. Change the color. If you're looking at Tiger TV, let's do this. I'm showing you a chart of the Dow. And that chart has a potential for one of the patterns that I favor least of all, which is a cup and ladle, not the cup and, the cup and handle, not the cup and ladle, which is a ChapmanWave technique that you make a cup formation and then power right through the left side high bar, moving usually to a leg D. Now, what's very important about this is that I've tried over the many months, but certainly over the last few weeks, to say, let's make this as simple as possible. Instead of getting too carried away and talking about the different currencies and the money flow and the just any particular technique that you want, I could list, just 2 dozen right off the top. I would rather say that the technique that has worked up until now, which will work until it stops working, is a technique that has just 3 letters. VIX, the volatility index. And I make it as simple as possible. In the teens, it is buying pressure. Now that buying pressure doesn't say, although historically it kind of says it, but it isn't a guarantee that that buying pressure says you've got to go to all-time highs or anything like that. All it says is that on every pullback, as we saw intraday yesterday, as we saw intraday today, there will be buying to support the stock and that it will not roll over and start to accelerate to the downside. As long as that VIX is holding well, and certainly with the volatility at, the volatility right now is at 16.26, having made a new low today of 15.69. 15 points. I wonder if I'm going to have a chance to get to those charts to show you what they mean. But in the meantime, the most important aspect for my subscribers to my opening call is how I show the 120-minute chart of the Dow in this one template, let's call it, of the 120-minute chart Dow, the 120-minute chart VIX, the short-term trading index designed by Richard Arms, which I use completely differently, but it's just a great indicator. The Dow the Dow Daily and the Dow S&P. Now these charts, what they show you is in five quadrants, quintrids or whatever they're called. I can cover an incredible amount of information, and that information says that in the ChapmanWave, going from a trough, especially in this case a trough E with a higher low than the 12,450 low previously. This was down at 12,006. What was it? 12,492. There should be at least 4 legs to the upside. Great. This is the 4th leg. On the downside, the troughs are not as important. What is important is how quickly you make the troughs and how steadily you keep making new troughs. In this case, it's just sidle down to leg D, and then down channel that I've drawn, which I call an inside track, because under the red line says it's negative for the VIX, and above the green line it says it's positive for the VIX, which is the exact opposite of the market. In other words, if the volatility starts to climb, then you should see some weakness coming to the market, and if the volatility starts to slide. The short-term trading index right now, 1.78 was the high. That's kind of a high reading for a market that was only down, 50 points in the Dow, maybe 7 or 8 or 9 in the S&P. That to me is not as important. What is very important is that there's an up channel. It's not a very sharp incline. The incline, I would say, is, gee, I used to be good at this. I would say it's at about 28 to 31%. And that incline has held the support very nicely at the 12,492 level in the S&P 1325s, and now it's running higher. Where should it run to? Well, this is going to be very important, because if the S&P takes out 1374.81, that says I've now got parallel wave count. I've got whatever it is at that point. If it's B, it'll be E/B. For those of you who know anything about the ChapmanWave, you know exactly what that means. But I'm going to make it even easier. It means that if you decisively take out the 1374s, then that up channel has a resistance point up in the, depends which day, it's a rising trend line, but around 1395 to 1397s. And the Dow, if it breaks decisively above 12,961, can go all the way to, here's that up channel. And where would the inside track sell zone be? Well, the level that I'm looking at is from, I keep hitting that line. That level is from 13,190 within 100 points, because there's a rising trend line over a couple of days. So now I don't really want to mess up these charts. I don't want to make them too, I'll do this and I'll get rid of it later on. If, in fact, the Dow gets into this area here, which I'm going to make red, because that's the repellent zone, remember? If it gets into the, depends on what day, but the 13,090 to 13,050 area, and then is repelled sharply, I'm going to be watching the volatility index. Now, let's do this. I'll run the numbers. Dow is up 62 at 12,867. S&P is up 7 3/4 at 1371. Comp index is up 26 at 2936. We've had a real bunch of, what can I call them, sectors that have become much weaker, and within the sector, some of the strongest stocks within the NASDAQ best sectors are starting to weaken, have been weakening for some time. So that has to be monitored carefully. Gold is down 10, was down more before at 1579. Silver's down 15, 2716. You got platinum down 6 at 1410. Now, copper is at 346, up about $1. So it's kind of in this range. It's okay to be in the range, but it needs to break out to the upside. It needs to get up above 4 in July. Otherwise, I think there's going to be a problem. And crude oil is at 66, up 89.88. Now, bonds are up 10 30 seconds. So let me do this. 877-927-6648. And that says to me that there is still skepticism. So now let me just run these through, and I'm going to try to do this as quickly as possible. You've got that cup formation in the mini cup formation. Remember, I spent a lot of time the other day saying, the Dow is holding the 200-period exponential moving average. There's been a sine wave up, over and below that line for a little while, but lately it's been making that support, and that support's at 12,520. It was a little bit lower when we were talking the other day. However, that tells you that the price could be in a sideways channel, and when the Dow gets towards the 12,000, if the Dow gets towards 12,940 to 12,990s, there could be tremendous resistance under certain conditions. And one of those conditions, the stochastic's only at 59%, MACD's just barely turned positive. This is a market that's moving up based on buying pressure that I've read through the VIX index, but it's not yet being confirmed in the daily chart. It's not yet being confirmed in the weekly chart, and it's not yet broken down in the monthly. So the monthly is still holding that last day of June, you remember? That was really important. That turned the tables and said, now think of a trading range. Now let's do this. So that's that. Let me just quickly, and now the 120-minute chart, as I said, is in leg D. Let's quickly go to the SPX. I want to just go through some of these in detail. Don't mess up. There you go. There we go. S&P, same sort of thing. You've got, this is now with the technicals that I'm showing you. If you look at the Tiger TV, you'll see, and remember, my shows are archived on Tiger 11, channel 11, so you can always review. I know it's speaking a little quickly. Yeah, sometimes I listen to Kramer. And besides the fact that it's really hard to get the volume right with Kramer because it's either too loud or too soft, he speaks really quickly. I'm not even sure how foreigners can actually make out what he's saying, because with the American accent and really quickly goes by, zips along. So I'm going to try to slow this down. I have a couple of requests in the den. The S&P, the last high was 1374.81. If the S&P starts to break into the 1378 to 1381 area, you've got to see that stochastic go from 71% to 80% or higher. MACD is only giving me the M formation. That says there is resistance. The fast-moving average is saying there's resistance to the upside. So a lot of things have to happen. Monthly chart is not quite as strong as the Dow, but it's actually still holding very well. The weekly chart technicals have not yet crossed positive. We'll see what happens on Friday. Now, if this is fascinating. If the S&P takes out 1374.81, it doesn't have to even close there this week. Then all of a sudden you've got leg C up in the weekly chart. Now a whole bunch of things come in. You see the C1, C2, for those of you who know a little bit about the ChapmanWave, that gave a sell signal, but it's only a temporary sell signal. I really should use a plus, but I can't because it went, the MACD and stochastic, everything turned down. There could be an overlapping wave. If this becomes leg C and through the following week of July, not just next week, but going to the last week of July, if the S&P takes out 1422.38, having made a peak C at one point during the next week, leg D could be really powerful above 1422.38. If it fails from here, it's that arch formation, the right shoulder failure, the dreaded H. And the stochastic says, it could happen at any point. MACD has not yet crossed positive. Wow, these weekly charts, something to behold. Now, let's quickly do the Qs. Q. This is the Trust Series, Power Shares. Now, look at this. Remember the up channel I was talking about? The Qs have been much weaker. They've been breaking the up channel support. They've been holding the 200 period exponential moving support, 64.21 right now, up 69 cents. But what's really important is that the Qs by, today's Wednesday, and its options expiration, by Friday, if the Qs are able to decisively break 641.51, then the high of 65.25 could be challenged in a cup formation as well as the up channel. Where would it break down? If by Friday at 4 o'clock it's been a sharp reversal and the Qs are underneath 63.50s. That'll be a heavy turnaround. I would anticipate then that the volatility index has gone to 18.50 to maybe even 19.10 if that had to happen, because the Dow and the S&P will also turn down. We'll go to the bonds, we'll go to other things, but we've also got questions in the den. The IYH, BAC, Bank of America, and earlier on was AMRN. I'll do AMRN during the break. I'll be right back. Basil Chapman, 877-927-6648. Be back soon.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Wow, here's a chart that describes exactly what I was talking about. Exactly what I was talking about. The S&P made that peak C. This is, folks, if you're looking at Tiger TV, you'll see the IYH. I had to redo this chart recently. I haven't updated it lately, though. Made a peak C in the ChapmanWave from the low bar. This is the iShares of the Dow Jones U.S. Health Sector Index. The 6102 low of the 12th of August of last year started a buy mode, which went to peak D. And then there was an instant restart right on the 3rd of February, week of the 3rd and the week of the 10th of February. Then it went up to a peak C1, C2, which also could have been a G. However, the MACD and stochastic fell sharply. I kept it as a C1, C2, meaning it just barely failed to make D. It went to 78.67 on the week of the 6th of April, and then 76.61. So 61, 6 cents, 7 cents would have made the difference. So everything about it said that should have been a peak D. Very often, if the price holds on the pullback and it starts back up again, gets even close to that area, it can go right through for leg D, and that's exactly what the IYH has done. So much for all the worry about healthcare and everything, because these stocks are soaring. iShares Dow Jones U.S. Health Sector Index, and the monthly has made its second. So 1, 2, 3. This is the third run to a leg E. So you've got to be a little bit careful because it's starting to get to resistance here. So the question was IYH. I'm not sure whether you're in the IYH, but I've got E in the daily. I've got leg D in the weekly. Technicals in the weekly are still really strong. Technicals in the monthly are still strong. The daily is still strong. So I don't have a sell signal yet. It's still holding very well. I would just say to you, if you are long, I would take just a little money off in terms of housekeeping, just good bookkeeping, good money management. Take a little off if you've been long and making money, but don't take the whole thing off. Why? Because until this breaks decisively under, it's at 81.14, until it breaks decisively underneath the high of 80.02. No, I'm not going to go there. Until it breaks under 79.30. Yeah, 79.30. This is holding really well. So that's what I'd be looking at. If it breaks under 79.30, I would then take a little bit more off. But the weekly is still very strong with 78.67 as major support. Then AMRN was a question. Then Amarin, which I periodically look at, made a peak D, and I said from the peak D, take a little money off if you are long, but try to hold some of it. Now, I believe that they're getting FDA approval any day now. It might be today. I really cannot say what will happen. I mean, these things, I know someone who used to work, he was the person who gave those he worked on the committee that gave the recommendations or the non-recommendations. And I have to tell you, you don't know what they're thinking. You think you know, but you don't always know. And he said that himself. He said sometimes we don't even have to look. We just know from the application that everything is wrong about the application. If they can't get the application right, it doesn't matter about their product. They're just not going to get it because we have to follow procedure. So a lot of things go into this. So I can't really tell anything about it other than to say, if it breaks down, now sometimes you get the report overnight like you had in Vivus, which plunged the other day and then roared back again. So you don't actually know what's going to happen. I would say that after the approval, let's just say it's today, tomorrow at 9, well, you'll know tomorrow if at the opening it gaps down 3, 4, 5 points. You know, that was a miss. But let's just say that it's kind of iffy and it pulls back. But if tomorrow at 10:05, 35 minutes after the opening, if AMRN, Amarin Core PLC, this is a biotech company, if it is pulling back, then you've got to be careful. But I would say at 10:05, 35 minutes after the opening, if this thing is above 15.10, the high of the day, but if it's above yesterday's high of 15.25, that's a very good sign. And that says that the weekly, which is holding really well, monthly I can't tell, it's just a mess. It was once a stock that was 1,425. So if it starts to move towards the highs, at that particular point, I'd say that's really nice action. And what I would say to you is take another part of the position if you haven't taken a little bit off. And at that point, you really have to take a little bit off. Even if it goes to the moon, money management says if it breaks above 15.60, it is very good. But you do need to take a little bit of money, or just a little bit of, just to reward yourself and also to have that money to say, great, good profit, and now we can handle the core position. So it's I can't even tell you it's negative if it breaks under 1363, because obviously that's negative. So I don't know how you will handle that, and it's very difficult. So this is where you want to lighten up a little bit, because anything can go either way. So I'll be back, 877-927-6648. Dow's up 55, S&P is up 6.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman, 877-927-6648. Now, I just want to finish this because I just found out that it's the 26th that the FDA is going to come out with whatever the approval or disapproval of Amarin Corporation PLC trading at 1508. If that's the case, the way it's walking the 9 EMA is really positive. I wouldn't be surprised if it's going to rally a little more. It'll probably have a little bit of resistance at the 1560 area. It's at 1509. So I haven't changed anything. What I would say is, as you're getting towards the previous high, I just think it's incumbent upon you to take a little bit off. And you know what? When there's so much risk that you can give back weeks and weeks of gains in a split second, I'm inclined, this is just my own personal thing, I would be inclined to lighten up, or I would say that if it gets to the 1560, it would really have to drop very sharply, so that I've added 50 to 60 cents of leeway. That's all. So that's what I'm saying. And the other thing is, if by Friday afternoon or Monday it's actually turning down and it's going down, that's not a guarantee that they're going to not approve it. It just says that the price is going down. 1363 would be major support. But the weekly looks very good so far, and the monthly, as I say, is really hard to tell because it had such a huge 1,425 once upon a time, down to, what did we say? I think recently, well, most recent low was $7 and a penny. It's been lower than that before. Wow, look at that. It was down to $5.99. So that's my stance. Now, I had a question about Bank of America. The Bank of America, BAC, has this pattern. You know, the 200-period exponential moving average in the BAC, which is trading at $7.77, down 16 cents after what initially looked like it was a better report. But, you know, I'd just rather look at the chart and say, hey, the stochastic's weak. MACD hasn't turned up until it can pierce 802. Really, until it can pierce 825. 821 was the last high. But until it can really get into the high eights, it's just stuck in a trading range. So I'd be a little bit careful about it. It could happen very quickly. That's what happens with these bank stocks. They either move quickly up or quickly down, all within a fairly narrow trading range. But that's just the way I'm looking at it right now. So I don't really see anything in Bank of America at this particular point. So let me put it this way. If Bank of America closes under 760, it's probably going to test the 740 to 720 area. And if it's able to finally break above $8.02, get to the $8.07, wow, then it can retest the high of $8.21. But right now, acting the way it is, I don't really have anything. It's just kind of there. I don't think it's a stock that I'd be looking at. Now, this is really important. In my opening call, that's my service that comes out every day. Very comprehensive look at the markets. I tell you what indexes, what techniques in the ChapmanWave to be looking for intraday. I tell you at what time, if such and such is happening at a particular time, there's a good chance that the market will close to the upside, or if it's to the downside, it can close to the downside, etc. Now, the most important thing is that every once in a while, for subscribers, I get requests. I try to fulfill it, but sometimes I'm just so busy I cannot give it the kind of time that I want. But every once in a while we do an options trade, and to me it's just naked options. It's just what is called white lightning. I'm not sure if Tom O'Brien coined that term. I know he uses it a lot. I've used it for years. But white lightning is where you're trying to grab at the smallest price possible an option that has the chance to really explode either up or down. Well, today I said there's a stock that's been on my watch list. Probably should have just gotten along the stock, and that's Triple M. It's out of my four horsemen: GE, IBM, Triple M, and UTX. Triple M has been the one that's held the very best. So the daily chart made a peak E, held the 200-period exponential moving average, closed yesterday at 88.98. So in my scan, what I decided to do was to see how it would fit in if we were to buy a call option on Triple M, a 90 call option, July. And the call option was trading at, it closed yesterday at, what was yesterday? At 23. Yesterday's close. Today's the 18th, so it was 17. 70 closed at 21. Is today the 18th? Yes. Closed at 21. And what I said, we wanted to buy it at 12. That's 12 cents. So what happens is, today, Triple M pulls back just 15 cents, then it pulls back 50 cents. That's really nothing, and then it moves higher. But if you understand how premiums work going into options expiration, and the market was weaker early on, someone, not us, picked up the options at 14 cents. Where did it go now? At 14 cents instead of 12. We missed by 2 cents getting an option that at this point is up at 70 cents. That's almost a 600% gain, 500 to 600% gain. That is upsetting. But there'll be another opportunity, and who knows what will happen. So that's the way it is. Now, I wanted to show you here. This is what I show my subscribers every day. Usually I show the 10-minute chart and the 120-minute chart. I don't give a buy or sell on anything about the futures. I give the ChapmanWave notation, and I show the parameters that we can use. I don't do that because futures traders have their own methodology. I'd rather give parameters and teach about the ChapmanWave than have to have yet another thing that I've put on my plate that I really might not be able to control. So in this case, the futures were down at, 9 o'clock, so it was way early this morning. There, our peak D, we had made peak D and the E-minis at 1357.25, back at 5 this morning, pulled back, had a failure, and was way down to the 1354.55 area. And what I'd said is that if there was a rally, that rally has to go, and it has to turn the 1353 to 55 area into a support. And if that happens, that could be very positive, as well as the fact I've been pointing out that the volatility index so low is buying pressure. Well, look what happened. The E-minis 10-minute chart is now in leg C up. I don't use any phantom peaks in the 10-minute, only 10 below 10 minutes. So that's leg C, should go to a D, doesn't have to, but invariably it'll end up going to a D. And you've got leg F/A in the E-minis in the 120-minute chart just now testing that resistance area. But wait a minute, this resistance area is a little different because it's a resistance area based on a inside track repellent line, but having gone this far, immediately you have to think at 1367, that whole area of 1370 to 1375, the previous high back on the 5th of July, that is possible if this rally holds into the close. So I needed to cover that just to show you what I do, how I am about my opening call. Now I had another question, and the question in the den is, Basil, look at JOSB. That's Joseph A. Bank Clothiers. And in fact, we've been short the stock for a long time. And I added a short just a few days ago at 42.20. We took profits this morning, so we took $1 out of that. And now there's this huge move. Now, yesterday, Joseph A. Bank, now this is a company that has, what do you buy? You buy one suit and you get, 20 pairs of socks and 6 T-shirts and a silk tie and another suit. They just give away a lot of things. But yesterday, they've been having a tough time. So, instead of buying one sports shirt and getting 3 suits for free, they had a 70% off sale. Now, maybe that sale was really attractive because this stock went to a low this morning of 40.50 and it's at 43.30 right now. So there are two things going on. I have no idea what that is. I'm not sure anybody will have an idea just so soon on how the first ever, I think it is, sale of 70% of everything in the stores right around the country. But maybe it was successful. The monthly chart to me says, doesn't matter. This thing has had its heyday, and it's at least in a big consolidation because of the MACD and stochastic being so poor. So I will be probably looking, maybe, I don't know yet, I'm going to see how the price action works, but I might be reshorting this very soon. It's only 185,000. Mind you, today it's not even 2 hours, just over 2 hours. All right, yeah, that is high volume. Certainly that's high volume for this hour of the day. But we'll see. And the thing about the monthly chart is it has held the 9-period exponential, the 200-period exponential moving, and it's trying to tackle the 9-period exponential moving average. It made a left side, right side price time match. This is about the point that I was expecting a bounce, which we did get. So this is more than a bounce. I think also this is a short squeeze. I wouldn't be surprised if there's a very high short position in Joseph A. Banks. But if the price that we shorted it at, I'm going to give it a little more room because we're still very comfortably short from a much higher level. So yeah, so that was Joseph A. Bank. Now let's just and coffee and bagels too. Yep. Now let's just look at corn. Of course, Larry Pesavento is really the star for this stuff. His program tomorrow, the Commodities Hour, that's where he'll deal with it. I just wanted to do it based on the ChapmanWave. The CZ contract, the December contract, has had a very sharp move, and this is a peak G/C, but the corn ETF at 49.26 is making a doji high from yesterday at 50.38. And this says to me, be a little careful here, because if it could be a real quick pullback, this is probably peak F being made right now. F for Frank, and that says be careful because the 120-minute chart went up ABCD, had another ABCDE, had another short-term sell signal, not a sell mode yet. So be careful because this could quickly, the corn ETF trading at 49.26 could go down very quickly to the 47.70, even the 40. It could even hit the 46. This has been a huge move. I would not be surprised. I'm going to draw it in right now if there's an oval digestive moment coming up here, and then we'll see how the weekly charts are acting. And look at that. So the weekly is a spectacular move up. It's just way over. But you know, being a squeeze, being the drought and all that, you got to expect that there's just a minor pullback to take its breath could pull it back to the 47.70s. Okay, we've got a caller online, and we've got Pat in Framingham. Hi, Pat. How are you?
Hi, I'm good, thank you. I was just looking for an entry point for Coke, KO.
Okay. Now, I needed just to ask you one quick question about when you say an entry point. Do you have any position at all in Coke?
No.
Have you traded Coke before?
No.
Is this a position that's just a short-term trade, or you're looking at something that possibly could be an intermediate-term trade, like a buy and hold for the rest of the summer or something like that?
Buy and hold, yeah. Mm-hmm.
Okay. Now that I'm going to ask you another question. What kind of stop would you be comfortable with? In other words, it's trading at, folks, we're looking at KO, Coca-Cola. It's at 77.03, down 66 cents. I have a very short-term signal in the daily that says it's pulling back. I'm a little concerned that all the indications that I have in my monthly chart are saying that the 79.36 top that was made 3 weeks ago, that if Coke was to pull back underneath 75.50 to 75 support, we might be looking at something a little longer in the daily and the weekly charts. The monthly still has very strong support at 73. So this is what I'm going to say to you. If you're thinking of dividend and you're thinking of this as at worst case, maybe making a trading range between the 72s and the recent high that it made it in the 79s, and you're prepared to sit with this position because the monthly chart is still strong, and there's a chance that if Coke was at any point in July into August, if Coke even hits 80.80 or 81, that's like a breakout to me. That means that Coke could go even higher. So I don't want to say to you, because I've got shorter-term signals, I wouldn't be touching Coke on the long side right at this particular point. I'd have to wait a couple of days to see how it settles. So this is my recommendation. Think about it. I don't think you even need to jump into this, but think about it. If you want to hold Coke and you want to give it a, so what did I say? If you want to give it like an 8%, stop. In other words, you buy it at 77, you're prepared for it to go down, let's say to even 70, because you think that there's a chance that the way it's been, money managers, fund managers have just been going to Coke over. I have nothing breaking down yet, although I have signals saying be a little careful in the monthly chart, but I haven't got any sell signal yet, that there's a chance that it could break to the upside. Then I would say to you, start a small position today, it could be tomorrow, but I don't think there's a rush to do it. And that position should be small, and it should have a wider stop. If you're asking my opinion about what I think about Coke I'm talking about between 2 weeks to 4 weeks, I would say I think that Coke is going to kind of go into a trading range that you're probably going to get a much better buy at between 75 and 74. And that's kind of the way I would look at it. If you want to hold on through the break, let me do a little bit more work on the chart, and then I can maybe hone it down a little bit more articulately. Would you mind holding?
No, not at all. Thanks.
Okay, hold on, and I'll be right back with Pat.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Basil Chapman. We're back. Dow's up 79, S&P's up 790. They're actually right in sync. Normally you would get the S&P just a little bit percentage-wise more than the Dow, and this is very interesting. So there are some Dow stocks that are acting much better. So we're on right now. We're actually looking at Coca-Cola for Patton Framingham, who wanted to start a position. My questions to her were, there were a couple of questions, but the most important is in what time frame. And if it's in the short time frame, then I'm going to have to say I don't see anything right at this particular point. Now, if Coca-Cola takes out the high that it made of 79, was that today? No, yesterday, of 78.66. I'm going to have to change my tune and say, oh, okay, that's fine. So this is what I'm going to suggest to you. If Coca-Cola can move up to 78.66, then I would start the position a little sooner. That is just a small trading position. I personally would ask you to wait a little bit, because if, now this is a defensive stock, not a defense stock like Raytheon or anything, a defensive stock, which money managers tend to go to more for income and safety than anything else. And that's what Coca-Cola's done. But now I've got leg F/B in the monthly chart. That says, wow, this is what I've got to be careful. I haven't got any signal yet, but the signals have to come from the shorter time frames. My weekly chart is saying, Coke is really close to pulling back, and if it closes under 75, 50, 75, that says that that entire bar of the 29th of June is vulnerable to 74.17. And if it starts to pull back like that, it says it's either making a big oval consolidation phase, or perhaps the stochastic is saying with the MACD and the stochastic lower on this move to the high than it was before when it went to the highs back in May. It says that there's a technical weakness there. So that's my recommendation. A small position, and you would have to treat it more as a trading position if it gets to, as I say, just above 78.66, I think. Yeah, 78.66. And then you'd have to have a stop so that you took pretty much no loss. And I'll tell you why, because if it goes up and then it breaks down and it comes underneath your entry price, then it's probably going to go lower. So right now, I'm going to suggest you hold on a while. Today's Wednesday. If you want, call me Friday. Let's look at it again, or even Monday. But my thinking right now is that Coca-Cola is pretty, even though I've got a peak C in my daily and it should go to D, I think that Coca-Cola is going to take a bit of a rest, and that rest could be about 2 or maybe even 3 points to the downside, and then it's worth looking at it again. So I am not able at this time to say, wow, this is so strong that I think that in 6 weeks' time the monthly chart is going to be at 83 to 85. I don't have anything to say that right now. I might in about another few days, but I don't right now. So you've asked me my opinion. My opinion is hold off a little bit. Try to enter for that kind of position underneath 76.91 right now, in the 75 somewhere, or give me a call and let's look at it again, okay?
Will do. Thank you so much.
Okay, don't forget, if it does go up to that 78.66, you might take a little nibble, treat it only as a short-term trade that has the potential, if Coke keeps going higher, to be at least a position you're in if it sort of breaks out to the upside.
Will do. Okay, thank you.
Thank you so much for calling. Now, folks, there's a couple of things. Now, once again, Larry probably will talk about it in his show, but he'll definitely talk about it tomorrow. I just wanted to say that the DBA, and I want to look at this because I've spoken before that I talked about a period of deflation. I've spoken about it for years based on my Japanization of our bond yields. I wasn't sure how the whole picture, I still don't know how the whole picture is going to be put together, but believe me, the price of corn is going to affect just about everything, corn and wheat. So I'm watching DBA, and if DBA, which is at 29.62, actually breaks out to the 30.60 area, wow, I don't know what to say, because that is explosively upside. If it starts to pull back under 29.62, then we've got this consolidation phase. I'm sure Larry will talk a lot more about it in his shows today or tomorrow. Thanks for being here. My service is the opening call. I'll be back on Friday, and have a great day.